please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
Welcome back. Today, the United States sneezed and the world has caught a cold. So we have to worry about what is likely to happen next in the United States, how threatening are higher yields, and will that be a drag on the dollar, on US stocks, and therefore on the global economy as well. For all these questions, I have an exclusive chat with Brian Moynihan. He's the second most powerful banker in the world, Chairman and CEO of Bank of America. Began by asking him if the year ahead for global markets will be a calm one or whether we should expect as much volatility as we saw in the first month of the year.
Start off with volatility and as people repositioned, and after the holidays there's always a period of something, and you see that people come back and move their money around, but it's stabilized, and in the end of the day the market's going to reflect long term the power of the companies, and the company's going to reflect the powers of the economy. And as you think about it, the world economy is growing. It's projected, we projected to grow at 3.7% for the 2018. The U.S. economy, we project to grow at 2.7%, and so those are good things, and so ultimately the market will reflect that. It may bounce around on the way there, but it will ultimately reflect it.
Yes, but a lot of growth or more than expected growth can also be a bad thing for volatility. We saw the US treasuries, 10-year treasuries go all the way to 2.95. Is that threat over? Have the markets got used to higher yields? Or if 3% or 3.1 were visited, we could once again see volatility?
Well, I think the Treasury moves are a lot of factors there. It's what's going on in the markets, flight to quality, a view of where interest rates are going, a view of inflation, and all that gets factored in. But people have to keep in mind about the U.S. interest rate scenario. Since 1950, when they started quoting the 10-year, if you go back in Bloomberg and look at it, you'll see that across all that time, the amount of days it's ever traded under 3%, other than in the current period since the 2008, 2009, are very few. Very few. So the interest rate environment is very low, and the Fed is trying to normalize the front-end rates, as it's so-called, and the back-end rates will reflect that also. So I think people take a lot of stock, but it's only back to where it was a couple of years ago. So it was here 2 or 3 years ago, 14, I guess it was 3 years ago. Now moving to 4, and people weren't that excited about then. It all comes down to what your views of inflation and growth are, and that's what you heard more noise about.
No, that's true. I mean, but we've had low rates for 10 years now. Probably we have a generation of treasury guys who haven't seen rates at 4%. I mean, therefore your thoughts this year, at least in 2018, are we likely to see a lot more of, choppy markets?
Well, the reality is, in the United States especially, what you've seen is the duration of recovery is one of the longest known. Yes. And so, people then think that, well, around the corner something has to go wrong, but you have to back up and think about what's going on. Unemployment at an all-time low. Wages starting to grow a little faster. The Tax Act coming in and providing a benefit to companies in both how they conduct business around the world, the territorial part of it, and lower rates in the United States, which helps provide more cash flow to finance activities. And so all that is very constructive for the markets, while at the same time, as usual, everybody always worries about what could go wrong, and that's what they look for. And so you'll see momentary ups and downs, and we came off of periods of unprecedented low volatility.
Okay, you'll get to hear more of that interview through the course of the day. But for now, let's get back to the IT space. You just heard from Mindtree, Rosto Ravanan. We'll also touch base with another mid-cap IT company. Hexaware is on our radar. R. Sri Krishna, the CEO of Hexa Technologies, joins us from the sidelines of the Kotak Institutional Equities Chasing Growth Conference. Mr. Sri Krishna, thanks so much for joining us on the show. I wanted to start by asking you about the guidance that you've laid out for the full year, which is about 10 to 12% as far as dollar revenues are concerned. What does this imply in terms of deal wins? How are they looking now? And you did have some client-specific challenges earlier that you had spoken about. Have they been sorted out?
So, what it means first is that we expect to continue industry-leading growth. It means that we have a solid order book on the basis of which we've given a projection and guidance. Usually our guidance for the year does not, is based on what orders have already come in 2017. That's the basis of guidance for 18. It doesn't depend a lot on orders during 2018. It does a little bit, and our pipeline is very good. But whether or not we win deals in 2018 is not going to impact our growth during the year. Growth during the year is going to get impacted by what deals were won in 2017, which was very robust. And so we feel very good and confident about maintaining our industry-leading growth. The client-specific issues are well and truly in our rear-view mirror.
Mr. Sri Krishna, good morning. That's interesting. So CY17 was good for you. Your revenues were up 12%, profit was up 19% despite a soft Q4. So can CY18 mirror the CY17% performance?
Well, I mean, we've given a guide. Actually, depending on which currency you look at, our CY17 growth was about 15.5% on US dollar terms. And we started off the year even in 17 with a guidance of 10 to 12%. And as the year progressed and as we got more confidence and more performance behind us, we actually upped the guidance twice and finally wound up on higher than the higher end of the third guidance also. I don't know whether we will meet or beat CY17. It was an extraordinary year for us. But we still feel very good in absolute terms, and that's reflected in the guidance.
But Mr. Sri Krishna, good morning. Thanks for joining. Exactly that pattern, can that be repeated in 18 is what we're asking. Because with each passing month, we're also getting good data, good traction in your destination economies, in the economies you service. And therefore, is it reasonable to expect that you're being conservative in the beginning of the year and that events are surprising on the positive?
Yeah. See, the economy, Europe's been pretty strong right through 17.
Yes.
As has Asia been, right? So I don't see a change in macro in Europe or in Asia. There's certainly a small uptick in macro in US, 2.4, 2.5% up to maybe 2.7, 2.8. So yes, and more some of the uncertainties are behind us. So yes, there is some positivity in the environment. My goal is not to ever give a guidance and then have to walk it back. So the only direction we hope to walk our guidance is always forward, never backward.
Okay. That's guidance enough, I must say. But what about the digital transformation then? Many IT companies are saying that now they're more confident about that transformation. At your end?
See, our company is entirely about three themes, and depending on who's defining what digital is, they would define all those three as digital. So our company is only about three things: automate everything, cloudify everything, transform customer experiences. So everything we do is linked to one of these three themes. And we define cloud as the third of these, which is transform customer experiences. But there are enough companies that actually define all those three as cloud. So, I mean, all those three as digital. So in some ways, then, a lot of what we do is digital, depending on what definition you pick.
Okay. You said that the client-specific challenges are now behind you. Wanted a specific update on what's happening with that large client in the travel and transportation space. There was some insourcing of work which affected your earnings last quarter. What's the latest there?
Correct. So the insourcing is complete. In fact, it got complete during Q3 of our calendar year Q3, which is also our fiscal Q3. So there was a little bit of revenues in Q3. There was nothing in Q4. So it's over. I mean, we still have other parts of the relationship with them that continue on engineering services, but that's a much smaller component. The big chunk has been insourced. Actually insourced quite successfully, and we were very cooperative with them to help them through the process.
Okay, all right. We'll leave it at that. Thank you so much, Mr. Sri Krishna, for joining us and giving us your view. That's actually a 360-degree perspective on the sector as a whole. We heard it from Mindtree and now from Hexa as well. So let's move on to another space. Paints is on our radar. The Berger Paints management is considering setting up an integrated paint plant in Lucknow. To get us details on the project, we're joined by Abhijit Roy, the MD and CEO of Berger Paints. Abhijit, good morning. Thanks for joining us. Tell us a little bit about this plant that you have planned? What kind of capacity will it have? When does it come on stream? And what will this do to your overall financials?
Well, this plant is planned for coming up on stream probably around end of 2019, beginning of 2020 calendar year. The capacity, the initial capacity might be 5,000 to 6,000 metric ton per month, and can be expanded at a later stage as and when the demand goes up. As far as our finances are concerned, it serves two purposes. First is that UP happens to be one of the largest state for us in terms of paint consumption, so servicing the market becomes easier. The second is it saves a lot of freight cost, and therefore it is advantageous to set it up near that location.
Abhijit, you're the most celebrated guest today. In a long time, people have not talked to us about capex, so it's good to hear that. What's prompting this capex? What's the capacity you are operating at, and how much do you plan to increase your capacity as a percentage when the entire plan is done?
Normal capacity utilization today, is around 75% in normal average months, and in peak periods it goes up to about 84-85%. So we will run out of capacity in the east and north area, specifically more towards Bihar, UP, that belt. By end of 2019 or beginning of 2020, and therefore this plant is being set up to take care of that requirement.
Abhijit, good morning. Looking at your margins for last 3 quarters, it looks like the crude prices have not impacted you at all. Is the straight pass-through still the norm for the industry? I mean, do you think if we go to say 80, 81, is that going to impact you at all?
For the decorative, yes, a little bit of a delay, but it normally gets passed through. Like we are taking a price increase effective 1st March of about 1.5% on an average, which should neutralize the cost increase impact completely. So therefore, in the decorative paint trade, yes. In the B2B segment on the industrial side, it takes a little bit more time. It needs more negotiation with the clients, and therefore some time is required for doing that.
Okay, Abhijit, how good is demand? I mean, if you look back historically, you must have seen periods of good growth. Does it look like we are on the cusp of something better in terms of economic growth?
Well, we've been hoping for it. So far it has been moderate demand growth, not a very robust growth as such, but things have been improving over the months, and the demand seems to be pretty okay, I would say. So it's not as if there is lesser demand. It also depends on how we perform. Overall, the demand might be growing at a certain pace, but we need to outperform that. So that's something which we need to look at.
Tell you why? Because at after the demo and the GST episodes, the talk among those who track the home improvement business was that there is not that much cash in the economy, and therefore these segments could even suffer. I mean, this was the counterpoint you were getting for those who were saying the home improvement business will do well. That's why I repeatedly come to you that this absence of cash with more people coming into the mainstream economy, is that hurting demand?
No, I think not for paint, because paint was always much more, organized that way. And, our trade has always been very clean, at least, the top level players. And the customers, of course, many of them were buying on cash, but that is, we suffered a little bit for the first 2-3 months after demonetization, but since then, things have become normal. Now there is no issues at all.
Okay, just a couple of more questions on this plant itself. Have you acquired the land for this plant, and how do you plan to fund it?
Yes, we have acquired the land. It's a state industrial zone, and it is demarcated land for industries. It will be funded by internal accruals only.
All right, Abhijit, thanks a lot for your time today. That's Berger Paints, stock doing well, up close to 1%. The market is trying to find some bottom, and clearly the Nifty has moved on from the low point. The mid-cap index too has moved on a bit. A lot of stocks are making highs of the day, and really Biocon stands out in that list. Not just Biocon, as you mentioned, other pharma stocks as well, Wockhardt, etc., doing well. Ashwini Gujral, Mitesh Thakkar back with us. Sandeep Wagre also joins us in our studios. Good morning to you again. Ashwini, turning out to be a bit of a pharma day on the upside, but banks are down. Your thoughts on trade so far?
Too early to say, whether there is something on the upside. Obviously, exporters tend to provide a counterweight. But what's interesting is that as we move towards 10,500, the premium is coming off. That means people are shorting at higher levels. We went short in the morning, covered. Now we've gone short again on the Bank Nifty because the recovery on financials is not too much. And beyond a point, IT pharma won't be able to hold on to this market. So this is a good time to reinitiate shorts or take your fresh shorts if you didn't, because 25, 200, 250 on Bank Nifty and 10,500, 520 on the Nifty, they are going to be significant turning points. And post such a large gap down, it's often quite natural to have some pullback, but often that pullback gets sold into. So chances are from here, you could get back to the lows of the day, at least on the Bank Nifty. As far as individual stocks are concerned, JSPL is a sell with a stop of 263, target of 248. ICICI Bank is a sell with a stop of 317, target of 304. And Biocon looks fairly good. So that's a buy with a stop of 628, target of 650.
Yeah, I didn't check the futures, but in the Nifty futures, your 10,480 was not violated, right? So there could be some reasons to be long on some stocks, Ashwini?
See, that depends on an individual's trading style. If, the market is overall showing a, downtrend and a strong one, you want to use rallies to sell into the market and sell into the weak space. Yes, IT is coming out with better results, etc., but overall tone of the market remains weak.
Sure.
So is Jindal still the only metal stock that you want to short, or is that a sector-specific call as well on metals?
See, metals will correct in line with global markets. Each day the globe is down, metals will come off. But I think the sector-specific call is on all kinds of financials. That's where money is coming out from. Metals could be a day's call. Tomorrow, markets go up around the world. The metals could again move higher. That's, more a sideways sector than a down sector.
Okay, by the way, Biocon is really the stock of the moment now. It's up almost about 3% in a falling market, and it's now inching back to its 52-week high of around 657 or so. So looking very strong. It was Ashwini's call as well. Symphony is the other one that's moving with in the green this morning, and quite a bit of action seen over there. Mitesh Thakkar and Sandeep Wagle are also with us. Mitesh, how would you approach this market after the kind of fall that we've seen in the first hour of trade?
Yeah, so I think on the indices, I would be comfortable taking shorts, particularly on the Bank Nifty. I've talked about buying the Nifty, Bank Nifty and Nifty put options. I think that trade still remains for me. On stock specific basis, I have both one buy and one sell call. Dr. Reddy's, and you were flagging out pharma stocks. I think that's clearly showing strength on the intraday. While ICICI Bank is a sell with a stop at 319 for targets of 302.
Okay, Sandeep Wagle is also with us. Sandeep, good morning. What are your stocks?
Good morning, Anuj. I think you said it right. Buy pharma, sell banks is the theme today, and I would go with that. A buy in a Dr. Reddy's as well, 2237 stop loss, target 2275, and sell a Bank of India, stop loss 116, target 108.
Okay. Well, Ashwini, actually the banks and the PSU banks in particular have lost a goodish bit. Would it make sense, would it be more profitable now to look for sell candidates in the NBFCs?
See, I would think so. This is not a problem which will get confined to PSU banks. If you start looking for frauds everywhere, all failed business decisions become frauds. So that way, this cloud will not go away, and that was the view with PNB fraud when it came out, that this will linger on. And every day, new strictures, and our style of investigating is close down everything, send ED, CBI, everything, put people behind bars. That will just create more panic. So I think whatever happens, there is more downside. There is serious, macro trouble in the financial sector.
Okay, well, more pharma names now: Strides, Arcolab, Sun Pharma, Cipla. So these stocks doing well. Of course, Biocon remains your stock of the moment. Ashwini, just one more follow-up question on DLF. That stock is reacting positively to news now.
See, overall, I think realty has done well, but my picks in realty are more SOBA developers, Godrej Properties, Prestige, DLF, etc. will not perform or outperform the overall realty space. So the south side plays are still much better than DLF.
Fair point. Okay, we are going to have lots more questions on the hour for all of you gentlemen. Thank you very much for joining us with your 10 a.m. trades. We'll take a quick break and leave you with, of course, the big exclusive that we got for you today. Kritika Saxena spoke to Rajesh Gopinathan, the Managing Director and CEO of TCS. She began by asking him if TCS will continue to deliver growth that is ahead of the industry average.
It depends on what the industry is. I think if you take the industry as technology services providers, we definitely are.
Yeah.
But NASSCOM now represents a much wider variety.
Yeah, yeah.
There are delivery centers of foreign companies here. There are captive units of other industries here.
Yeah.
They're all getting clubbed into and they're being called part of the industry. Hardly part of the industry. That's not their business.
Yeah.
So in our competitive
anymore?
set, I think we are quite confident about it. The rest of it depends on company dynamics and rather than competitive dynamics. So we don't want to comment about it.
Okay, but will you be within that range or higher?
Again, as I said, I don't want to use that as a benchmark.
Okay,
it's not the right one.
For FY18 then, Rajesh, what is the outlook like? You're ending on a positive note. In terms of the scale and the deal momentum, are things looking better as you go into FY19? Is FY19 looking like a better year than FY18?
So every time around this time of the year you ask that question.
I always ask you if the next coming year is going to be better. And you often do give an answer, Rajesh.
Yeah, okay. I need to be more careful than that then. See, the momentum is there, as you've clearly seen from the deal side of it. And from an industry perspective, various industry groups are coming together. We have called out the bottoming out in retail.
Yeah.
And as you've seen, some of the deals are coming from that space.
And you've said the big challenge, that is BFSI, another 2 quarters left and that should start getting better.
I think so. We are much more constructive on insurance as we see this. And banking is still an area that's work in progress. And we need to see how that turns out. So other than that, most of the other industries are actually doing quite well.
At a group level, Chandra is working on increasing synergies. As you look at going to the next level, building the scale further, how important is synergies across Tata companies, the other IT companies, there's Tata Elxsi, there's Tata Technologies. Have you started those synergies already with the other IT companies in the group?
I think the chairman's message on simplification and synergy and scale is very powerful.
Yeah.
And technology per se could act as the single most integrating factor across the group.
Exactly.
So there's a new chief digital officer in the group, and thinking is also becoming much more widespread as to how do we optimize and how do we enable technology to act as a fabric that integrates across the entire group. So we are very excited about it and how do we participate in it. But it has to evolve.
How long will it take to see, get some clarity on how the synergies are going to happen across the IT companies, across the tech capabilities?
It's not really about the IT companies that the focus is. The focus is against the operating companies and how do we get together. So we have been having series of meetings with various companies. People have been coming here to to our EBC in Banyan Park. And not just that, we are increasing our focus on trying to think as to how do we learn from the transformation agendas that we have participated in and how do we bring that to bear to companies across the full scale spectrum inside the group. So how do we make it available for relatively mid-sized companies to actually participate in the technology spectrum in a much more holistic way.
Okay. What are the chances of a big bang Tata Elxsi, TCS, Tata Technologies merger?
We should ask their shareholders.
But is that an option, looking at a merger with other IT companies in the group?
That's not the focus of the agenda.
That isn't. So, no. Okay. Fair enough. Rajesh, let me ask you a point that I wanted to mention. You have talked about how acquisitions you will do, and even Chandra used to say this, if it fits in the right skill set or the niche capability that you need at that particular point in time. Why haven't we seen TCS be aggressive with acquisitions in the last many years?
We have been aggressive in our own forms in many ways, but as I said, the focus is the right asset at the right price point is the
Are there
key.
assets right now that you're looking at?
There are assets of both natures. There are right assets at atrocious price points, and there are assets at the good price points, but which don't fit, fit us. So when we find the right one, but the important thing about TCS is whenever we have made an acquisition, okay, so our hallmark is we do a few things, but then we try to execute it exceedingly well. So whenever we have made an acquisition, we have stayed very, very focused with it, and you will see us constantly staying with it. We have not done an acquisition and then walked away from it. Exactly. So whether it is Japan, whether it is France, whether it is any of the other ones in the earlier times. So given that, our, what should you say, the frequency of acquisitions is going to be much more measured.
Okay, that was of course TCS CEO talking about a lot of issues. The one thought which really stood out for me is that the merger of group companies is not being considered right now. So that's
TCS. They are looking at only other. I mean, Chandra's point that they will consolidate it like businesses, like consumer. He said that doesn't apply to. That's not the focus for TCS.
Yes, exactly, and that, that is actually a positive news for a stock like Tata Elxsi, because the thought process was that if Tata Elxsi gets merged with any other company or TCS in particular, in that case the positive that Tata Elxsi is getting right now, that will get diluted, but that is clearly not the case. So for Tata Elxsi shareholders, that was one big risk, that in future if it gets merged with TCS, if it gets merged with TCS, that's negative news. The fact that it will not get merged with TCS is actually positive news for Tata Elxsi shareholders, and that's why Tata Elxsi as a stock is once again rising after that initial downtick.
Okay, we'll keep an eye out on that stock. It's up at the high point right now. Let's take a break on that note, but when we come back, we'll return with the latest commodity trades. Our commodities editor Manisha Gupta will join in.